Guys, I have a confession to make, and you're not going to be too happy with me, but I went against all of my savings rules and being the financial minimalist that I am. Worst of all, I did what Graham Stephan told me not to do. I went to Starbucks and I bought a $2.65 caramel iced coffee with cream, no classic syrup. Now I'm ashamed of myself and it hurts me inside to say it. And it's not like I wasted $120 on coffee or anything. But instead of me talking about how I burn money on my overpriced coffee addiction, I'm going to tell you how you're burning money as well every day without you even knowing. Make sure to smash that like button below so I can afford to eat dinner at night. Just kidding. I don't actually make money from these. I always say cash is king, but in reality, cash is trash. All cash does is burn a hole in your pocket without you even knowing. And you want to know why that is? It's from our little friend called inflation. If you don't know what inflation is, it's the rise of products and services over time. So the problem is, if you have your cash sitting around in a checking account, you're actually losing buying power every day. I'll show you and give you examples of how to combat this so you don't fall in that trap. Here's how much money you'd be losing over 20 years if you had your cash sitting there not making interest. Yeah. Think, oh, my cash is safe. I have it in a checking account, right? It's not going anywhere. No, you're wrong. So the current inflation rate in the US in 2020 is around 2%. So if your cash is sitting there not collecting any interest, you're losing 2% buying power every single year, silently. If you really think about it, this paper I'm holding right here is worth nothing. And don't worry, it's fake money. So just like my uncle Grant Cardone says, you need to be putting your cash in assets that cash flow. Now, when I mean assets, I don't mean clothes or Gucci belts. One of the best and proven ways to protect your wealth over the long term is through real estate. Real estate's not usually as volatile as the stock market, and it's something you can physically touch. That's why Grant Cardone loves it so much, because he can actually touch his assets and he knows they're there. So it's a proven fact that 80% of the millionaires in the US are made from real estate. Going off those statistics, you should probably consider getting in some real estate. So one of the biggest reasons people love real estate is because of the tax benefits. It's almost like you're buying into a tax shelter. So when you own real estate, the government automatically gives you all of these tax benefits. Why so many people do it and have their money in it. Real estate has historically outperformed inflation and it is a great vehicle to put your money in. Another way for you to beat inflation would be to invest in the stock market. History shows that stocks always come back, but you would have to stomach that loss if there is a downturn. The way this works is you're investing your money in companies in hopes that the company will do better and grow over time and hopefully appreciate the price of the stock. So your stock shares appreciate over time rather than just your money collecting dust. Historical growth doesn't always mean it's going to do the same thing, but you can kind of get an idea of how that asset performs. I was looking at buying something like VGT, which is a Vanguard Growth Technology Fund. If I would have put $10,000 in, this is the growth it would have had over 10 years. So this is a huge motivation for me to kind of stuff as much cash as I can in these assets, right? My goal is to have as least amount of cash as possible. I don't want any cash, right? The cash is not doing anything for me. I'd rather have something that's out there making me more and more money. It's right now at all-time highs. I'm sitting around 30% cash. Whenever I have cash laying around that I don't really want to put in the market yet, I let it sit in this account called SPAX that every month pays me interest. So at the end of each month, I get paid just a little check. And that allows me to be able to wait for a market dip. This isn't a place you want to store your money long term. It's just kind of more of a placeholder while you're waiting. So the interest rate is around 1.5%. So actually, I'm losing a little bit of money, but not as much as, let's say, a checking account. I usually try and stick with the first two options just because I feel like you can make more from them. So if the first two options are a little bit too risky for you, then there is this thing called a bond. And what that's going to do is give you a fixed rate on your money. Usually these barely outperform inflation. So they're going to give you about a 2 to 3%. Maybe a 4% if you can find it, fixed income rate on your money. Don't want to do any of these. There's also things called high interest savings accounts, and they're usually with smaller banks and give you a greater rate of return on your money because they're usually smaller. If you really want to grow your wealth in the long term, you're going to want to stick with things like the stock market and real estate. Right now in 2020, pretty much all of my money is in the stock market. And this year, one of my big goals is to buy my first rental. I've always wanted to get into real estate, and it's just been a matter of saving up enough money so I can hit my 20% down payment. I also want to start dabbling in individual companies just so I can try and maybe outperform the market a little bit more. Plus, let's be honest, individual companies are a little bit more fun. It's crazy, guys. I'm so close to 200 subscribers, and it's only been like a month, so we're growing crazy fast, and I can't wait to see where this year takes us. If you enjoyed the video and learned anything from it, smash that like button and subscribe to the channel so I don't end up on the street. Leave a comment down below of what you do to invest your money to beat inflation. Don't forget to join my Discord chat, link in the description. We're in there all day just talking about investments. Until the next one, guys, I'm out.